Hey, Grant Cardone here, and welcome back to the Cardone Zone, where every single Monday I bring to you the economy, real estate, and your money. It's Money and Mondays. Make sure you subscribe to the channel if you're enjoying this information. Comment, like, turn on the notification bar, whether you're on Facebook, YouTube, or you're listening on a podcast like my friends at Spotify and iTunes. I appreciate you joining me today. Grant Cardone here. Every Monday I come to you to talk about your economy, your marketplace, your money. And today we're talking about the housing crisis in America. They're calling it a crisis, but I always say never waste a good crisis, okay? I mean, why don't you go ahead and take advantage of that bad boy. I have about 600 people also on a Zoom call with me right now. At the end of this Cardone Zone, I will then take questions from that audience and literally underwrite deals that they're working on. I've gotten emails this week on deals they're looking at, multifamily, single family homes, opportunities in the marketplace in this housing crisis. So let me just tell you what's going on with the housing crisis in America today, because this will continue to persist into the exaggerated future, meaning for long periods of time, this is going to continue. Number one, there's not one place in America, not one county anywhere in America. And if you're an investor in real estate, and by the way, you're going to be an investor in real estate. It's like food. Like, it's not like you're not going to be investing in food and water. Food, water, and housing, you don't have a choice. The question is, will you buy it and make money off of it, or will you just buy it and lose money on it? So that's why I say real estate has to be part of your portfolio, part of your investment strategy. It's got to be part of your budget, and it's got to be part of your, if you want to, how you make money. Okay, it could be in addition to the car dealership or the plumbing company you run and own, the roofing company. It's like, how could I actually make money off of my housing rather than spend money on it? Whether you live in a single family home or you want to buy the apartments in your marketplace or a shopping center or a hotel, you're going to either spend money at the Hilton or you're going to make money on the Hilton. It's your call, okay? It's your choice. But what I want to do is I want to give you like some facts about why is this even happening? Because the more you know, okay, the more your certainty goes up. Warren Buffett talks about this. He says, look, if you want to get rid of risk, just increase knowledge. The way to increase or decrease your risk in any situation is to increase your knowledge. And the reason I buy so much real estate, we have $2.5 billion, $6 billion?
2.5.
$2.5 billion worth of real estate today. We just finished closing 3 deals in the last 30 days, a $69 million apartment deal, a $92 million office deal next door to me. And I might buy the office next to the multifamily I bought in Boca because it's next door. Like, when you know your market, K-N-O-W, when you know your market, when you know what's going on around you, at some point you're going to look up and say, wait a minute. And that's why people that get great at what they're doing win at what they're doing. Why? Because they increase their knowingness, whether you're hitting a hockey puck across the ice or you're buying real estate in your marketplace. Once you know your marketplace, once you know what's going on in the marketplace, okay? For instance, there's not one county in America where minimum wage can buy a house. So what does that mean? So I'm going to do a little research right now, and I'm going to follow the numbers, right? That's what Jeff Bezos did to find Amazon. He followed all these numbers, okay? So let me see. How many people are on minimum wage in America? Millions, right? And interesting enough, 80 million workers aged 16 and older in the United States were paid an hourly rate, representing 58% of all wage and salary workers. Among those paid by the hour, 542,000 were paid minimum wage. Okay, so that's 500. What does that mean? That means 542,000 people. That's not bad news, folks. I mean, unless you're on minimum wage and you're like, I got to get off of minimum wage. So, but I'm talking to you as an investor, how you take advantage of that. If you want to get off the minimum wage, that's knowledge. I'm like, okay, wait a minute. I can never own a home if I'm on minimum wage. If you're not a minimum wage person and you're like, okay, there's 500,000 people on minimum wage. There's 80 million workers in America, 80 million that aren't paid enough money. The average wage, the median wage in America, just so you know, is $58,000, which $58,000 isn't going to buy much of a house either, okay? So I'm explaining to you, first of all, the minimum wage, there's no places in America, not one city in America, one county in America where they can actually qualify for a home, okay? Home prices, 3 years ago, 2018, home prices were growing at double the rates. This is 3 years ago. This is pre-pandemic. Home prices were growing at double the rate of wages. So if you look at wages, if you go back and look at any kind of wages across America, you're going to see this, a flat line. I'm not talking about for a decade or two. You're going to see home prices going like this, okay? You're going to see apartment rents going like this. You're going to see college tuitions going like that, okay? This is college, scamming people out of money. These are apartment rents. These are home prices, and these are wages, okay? And then you're going to see interest rates doing this. These are rates. Okay, now when you see these four things, this is your economy I'm talking about every Monday on the Cardone Zone. If you're enjoying this today, I just popped out from a house. I was doing construction work. That's why I'm dressed like this today. I apologize. But I jumped. You guys on Spotify, you don't need to worry about it. I jumped from this house project I'm working on because, I don't even love homes. I think homes are poor investments when you compare it to office, big 200,000 square feet of office or 1 million square feet of multifamily. When you compare one home to the opportunity of many, many doors and many renters and many lease contracts and lots of cash flow, a single family home is a poor investment. But when you see these cross over, okay, what happens at colleges? $1.5 trillion worth of debt. COVID happens, the colleges empty out. Apartments, COVID happens, no apartment emptied out. We collected 95%, we kept a 95% occupied rate, and 98.5% of the people that occupied paid their rent and performed, okay? Homes have gone up in across the nation almost 20% in most markets, excluding where there's negative migration, meaning there's more migration outside the city of New York City, for instance, than back into the city. When there's negative migration, you've seen in every other city in America, home prices have gone up as much as 20%. In some places, Aspen, Malibu, Miami, what else? Austin, Texas. We're talking about home prices going up 60 and 80% this year. Naples, Florida, skyrocketed 70 and 80%. Palm Beach, just up the street from me. What is that, 45 minutes, Ryan? Those prices are hitting record prices. Home prices there were like 30 and 40 million. They're seeing $110 million sales in Palm Beach today, never before, breaking every record possible. We're seeing positive migration across the country from California into the state of Florida in numbers, historical numbers never seen before. New York all the way down to the tip of Florida, but also people in New York floating into Pennsylvania, into Philadelphia, going into other less migrated cities, into the Raleighs, the South Carolinas, the Fayettevilles, the Ozarks. Like, it's crazy what's going on in America right now. California's migrating out into Denver, Boise, Idaho, into Arizona. We're going to be underwriting a deal in Arizona today at the end of this show. So I'm telling you that because the housing market in this country is on fire. In addition to these kind of things happening, okay? In addition to these kind of things happening, the reason the housing market is on fire, okay, is because, number one, it's an emotional response to COVID. Okay, 2, cash. Cash printed. We have printed. Trump printed 20% of all the US dollars in circulation were printed by Donald Trump. Another 22% have been printed and will continue to be printed by our new president, Biden. Okay, 40% of all the US dollars in circulation, basically, they are verifying what I have been saying for 7 years: cash is trash. Cash is leaving its bank and going into real assets, okay? You have investors outbidding buyers on homes, okay? Investors are beating the buyer at home. Let's say there's a home in Denver, it's $450,000, and the guy can only qualify for $450,000. He's gonna put $90,000 down. He's a banker maybe, or an engineer. He's got a good job. He's going to put 90 grand down. He's going to finance this. It's going to cost him about, what is that note going to be?
What's the number, 90
450 times 0.0055. His payment's going to be $2,500 a month. And I think that's right. And some guy says, you know what I'm going to do? I'm going to pay $500,000. I'm going to write a check. I'm gonna pay cash for it, no financing, and I'm gonna rent that house. I'm gonna rent it out for $3,000 a month. He's gonna rent it out, make it an income house. He's gonna earn $36,000 divided by his 500. He paid 50 grand more for the house, and he's gonna earn 7.2% on his money, or so he thinks. And he's like, I can do this all day long. So what's happening, and this is happening all over the country, folks. It's happening right here in Miami. I know friends, it's happening in Houston, Texas. We're about to announce a big purchase in Houston, Texas. It's happening in Houston where buyers are being outbidded, not by other buyers. There's a new level of player in the marketplace, the investor. The investor's like, I can't go buy a big portfolio like Grant. I can't go buy an apartment building like Grant, but I can buy a single family home. This has never happened in the history of our country, okay, where investors are now consumers of the single family resident, turning the nation into renters. And I have been saying this for at least, 9 or 10 years. America will become a renter nation, okay? And the last thing is international buyers. And you're going to hear more about the international buyer coming into the marketplace right now. America, by the UN, was just rated the #1 nation in the country. They thought it was going to be China back in January. And the UN just said the number one most attractive country for international dollars or international investors will be God bless America. Okay, according to the UN, published Monday, overseas investments by businesses around the world fell by a third in 2020. The U.S. recorded a 40% fall. This is back last year, but narrowly held on to its long-term position. The UN in January estimated the U.S. had lost its top spot, okay, and then came back this week and said, not only did America gain this top spot, but its economy will grow 7% this year. This will be the biggest growth that America has seen probably in the last 10 years. This year, supported by $6 trillion in approved stimulus. You're like, hey, Matt Biden must be doing a good job. Yeah, well, he about to rain $6 trillion onto the economy. Now, this has really affected a lot of things. I think there's 3 more zeros right here. This is going to affect a lot of things. And we've already seen it. You saw the precursor to this during COVID. 40 million people were out of work and everybody still ate. It's insane. I've never seen this in my life. 40 million people were out of work, and you would think people bought more cars and watches last year than in the history. Rolls-Royce had the biggest year they've ever had in 127 years. Now, how's that even possible? 40 million people were let go. Shopping centers were closed, okay? Waiters didn't have jobs. Broadway actors didn't get income. Why? Because $6 trillion turns into a bunch of unemployment money where families are getting more money to stay home than they are to work. Why am I telling you all this? We are 10 million people less unemployed than May of last year. So the unemployment rates are coming down again. We went from 40 million to 20 million to now 10 million people unemployed. None of which, by the way, I don't even trust any of these numbers, none of which includes the ineligible, the denied, or the people that can't file. They don't even give you any of the real numbers anymore. They just give you the numbers they want to. So before all this craziness happened, oil this time last year was $17. Today it's $72, just since in the last since January. Okay, oil was $2.50 a gallon. I think it went to zero, minus $40 during COVID. It's at $72 today. This is inflation, folks. It's here. Okay, but I'm gonna make some predictions here before the show ends. I'm gonna make some predictions. Every week I'm gonna make some predictions here.
You're right, in 2020 it went negative.
Yeah, it was negative. It was a minus $40.
Wow.
Okay, that was Trump in there. Trump was pushing on the programs. We had all this gas coming out from underneath. They tightened down everything here. We weren't taking in imports. We're back to the old guard now. We're back to the old establishment. Biden's not a Democrat. He's an established politician, been around for 60 years. It's the old guard, the old boys. It's a network. It's the old country club thing. They're gonna do their deal. They're gonna say they're gonna take care of you. They ain't gonna take care of you, okay? This $6 trillion, you're gonna get a check for $1,400 a month. You're like, oh, I'm so good. What you want is a piece of that $6 trillion. Where's that money gonna go? Now, if they start spending that on highways, that's going to be some big jobs, and that'll be big money, and there'll be a tremendous amount of waste in it. I'm not in the government business, so I'm looking at from the outsides, and you should be too. How can I go get some of this windfall? Okay, 10 million people. We're down from 21 million people last year. Now, you're going to hear about inflation right now, and you're going to hear, oh my God, inflation. Oh my God, inflation. But if you look at the bond rate, okay, the reason I don't think we get inflation, and I don't think we get long-term inflation, bonds, 10-year bond, 10-year bond. You're going to see a 10-year bond that spikes. Let me see if y'all can see my computer here. Watch this. And this is for the last year. Is that a good one? No, there it is. Here's a year. 1 month. See, look at this thing, okay? Now, we've been having a bunch of inflation talk recently. See, Johnny, can I go to a year here? We've been getting a bunch of inflation talk, and you see interest rates have gone up from 0.5 point. This is back in May of 2020. COVID happens. Why did interest rates go up? What happened here? You would think that, okay, we're at 3% unemployment, and the interest rates in America were 5% in May of 2020. Is that when it busted? If I go back a little further than that, 5 years, okay? Notice interest rates for the last 5 years. It looks like this. Okay, basically now we got a spike up here. We got a spike going like this. So why is that happening? Why in January of 2019, interest rates were almost 3%, and everybody said, well, they have to go up. They can't go any lower, and they continue to go lower. Now what's happening in January 2020, January, February, March, what was happening in 2020? COVID. Oh, yeah, shit, the Wuhan. Watch this. We're going to collapse the freaking U.S. economy and shut down every country on the planet. And in only, how many months was that? In only by January of 2020, what happened in January 2020? We're about to have an election. In November, we have an election. Notice when the spike starts. January 8th, January 9th, January 10th. Let me get to November. We're starting to have some movement forward. I'm in St. Bart's, by the way, in November. November.
2019, right?
Yeah, November 2019. That's the election, right? Mm-hmm. So let me just go back to those dates. November 2020. Right? What are we in? 21 right now? Yeah. Yeah, so see, look, I'm 1/1/11. Where's my November date, man? I'm having a hard time getting it. That's 1 month.
So it's right there on that big drop, that big drop down right
here.
There.
You think that's November? That's 01. Yeah, it should be right here. It should be there.
Yep.
There. Oh, I got to go back further. Okay, I don't know how to use my own damn calendar. Okay, is that 19? 20. We're in 21. Yeah. No.
Yeah, it's already been a year. It's crazy.
Yeah, God damn, I can't believe it passes this long. But what happened to home prices here in the last little bit, Johnny? Okay, is nothing but this. Everybody's talking about it in every city. And what happens is when the U.S. government, okay, the Treasury Department is buying bonds every month. Okay, so when bonds come due and the government steps in and says, "Yeah, we'll take as much as you got." Let's see what bonds were bought last month. It's crazy how many bonds have been bought recently. And here's the bidding wars right now on homes, bond market. When the U.S. government steps in and buys their own products, what happens is it's supply and demand. As long as you got a lot of buyers, you'll have a low price. So when the U.S. government steps in and says, we'll buy all the bonds, it keeps interest rates low. So despite the fact that it would appear that interest rates want to go up, I'm going to make some predictions here, okay? This country will become, guarantee you, okay, will become a renter nation in the next 3 to 5 years. You will see it substantiated, and you will go back to this date and say, dang, I should have taken advantage of this. This will be a super cycle for the U.S. investor and international investor of multifamily apartments in this country. Inflation will last longer than the inflation, okay? Inflation is a temporary spike and it will pull back. Interest rates will not be higher next year than they are today, despite what you hear by the government. You guys can decide whether I'm right or wrong. We can go back and look at this show. Is he right or is he wrong? House markets will have to compete with investors for housing for the next probably 3 to 6 months, and then they will continue to stay in the marketplace as long as the rent makes sense, right? Meaning, can I earn 7 or 8% of my money? If so, owners will have to compete with investors, okay? The rental market will, the rates on rents, and I've been saying for the last 3 years, rents will probably flatten out. Before COVID, I said rents will flatten out through 2020, 2021, 2022, and then they're gonna take off and soar. Okay, Dolphins will make the playoffs. Kansas City will win the Super Bowl. Cardone Capital, these are my predictions. Cardone Capital will reopen for Reg 8 investors, and Grant Cardone will announce a major purchase of a major magazine. Okay, what time is it? Okay, and by the way, the last thing is Ryan Secco will come out of the closet and finally announce his marriage to Johnny, the camera guy. Okay. All right. So look, every Monday, I come to you talk about real estate, folks. I'm telling you, like if you're in a place like I was looking last night on my because I'm underwriting these deals in Houston, Texas. Okay, and I pull up Sugarland housing, and then I just go to news. I'm just going to show you how I do it. Okay. And then I start looking up land area home prices up recently. Oh, why are home prices up? Okay, let's go look at this. I'm sorry, why are land prices up? Because first it's the land, then it's the permits, and then it's the sticks. Okay, it goes in that order, right? First it's the land, then it's the permits. And it says prices increased 2.5% from February to March. 2% in 1 month that's a big increase. Prices are up 8% from March in 2020. Of the housing market there, okay? What's the average price of a home there? Woodlands, okay, here's the Woodlands, Sugarland, U.S. Census. I mean, Sugarland, Texas is a good gauge of what's happening in the rest of America. So if I go to Sugarland, I'm on Zillow now, and say, hey, what's going on in Sugarland? Are there any opportunities? First house that comes up is $197,000. So it's $200,000, okay? $200,000. What's it cost? What's it cost to buy a $200,000 house? I can put 5% down on this, right? $10,000 down. I'm gonna finance $190,000. Okay. I'm gonna go borrow money. I'm gonna take $190,000, and I'm gonna go buy 0.55. That's gonna give me a monthly. It's going to give me $1,045 payment. Plus PMI, which is going to cost me another $200. Plus the insurance costs me another $100. Plus gas, water, electricity. So this and landscaping. So this person needs to make at least what to qualify for this loan, Ryan? Do you know? What do I need to qualify for a house?
I know for apartments it's 3 times. It's going to be on your credit score and.
See, this is, that's not Sugar Land though. That's Houston, Texas. So let me get the Sugar Land. Now watch what happens when I get the Sugar Land. Okay, $119,000 for a townhouse. That's Houston, Texas. Here's Sugar Land, $239, 77498. See how Zillow stuck in some of these Houston addresses? Townhouse, $208,000. If I go Sugar Land proper, I mean, there's some $1 million homes in Sugar Land proper. There's a condo for sale, $269,000. So that's the real pricing. Here's a $67,000 condo for sale in Leawood. I don't know where that is. Sugar Land. Oh, there's $745,000. Now watch this house, okay? There's a $200,000, $745,000. I got to put I'm going to have to put $70,000 down on this house because of the price, right? $670,000. You'll have multiple bidders on this house. Payments are $4,000 a month or thereabout. This guy is probably going to have to compete with an investor that wants to rent this house for $5,000 a month. And I'll bet you he could find somebody that would pay $5,000 a month for this beautiful home. Johnny, can you show this house? Gorgeous house.
Yes, sir.
Now in Houston, in Miami, that house would be 4,300 square feet. How much would this house be in Miami?
How many square feet?
Well, look at it.
$2 million.
Can you see it?
Oh my God.
Yeah, this would be a couple $1 million here, at least, depending on where it was located. If it was on the water, it'd be $12 million. So the point I'm making to you right now is this. When you look at your marketplace, okay, you can't go build this today. Supplies, you can't even get supplies. You can't get glass. You got a glass shortage in America. You got lumber problems in America. You got lumber's up 90% in some places. Like, it's insane. People are hoarding lumber. You got automobile dealers that can't get their trucks because they can't make chips because of COVID. So you got supply problems everywhere, which has raised prices up, and it could create an opportunity. For the guy that could pay $4,000 to move his family into this home, another investor could say, hey, I'll pay $765,000. I'll pay $765,000. I'll rent it for $60,000 a year, 12 years. I got my money back for the house, and I'll pay cash for it. How's he gonna pay cash for it? Because he don't want to leave his money at the bank, ladies and gentlemen, and earn what? Because you're hearing about inflation, but what you're not hearing is this: the banks have not raised what they pay you by even 1/8 of a point, much less a quarter or a half. The banks are not raising interest rates. And if they're not going to raise interest rates that they pay you, you're going to take your cash out of the bank, or you're going to take your cash away from Fidelity or Merrill Lynch. I think the stock market's off again this morning. It's already, some people think that we're in a 10 or 20% correction right now. Bitcoin's off 50%. So I'm telling you that to tell you this: if you're not going to get paid any more money, these people that are sitting on cash, trillions of dollars in cash, more cash than I have ever seen in my entire lifetime. And you're going to earn zero, and I've been talking about this. That's your interest rate at the bank. You could go over here and you could go to that house, that same house that you had a $3,000, what was that $745 payment? He can get a loan on that, right? Mm-hmm. He can get a loan. He can get a $550,000 loan on that. Put 20% down times 0, 0. And as an investment property, he could actually probably pay 3%. His payments are going to be $16,000 a year, $16,500 a year. He's going to earn $60,000. He's going to put a good tenant in there. He's going to earn $34,000 a year in cash on 20%, $750,000. He overpaid for the house. He put 20%, $150,000 down. That's his down payment. He's going to earn $34,000. Let's just see what this is.
60 minus 16.5 is 43.
What is?
60 minus 60.
43. So he's going to earn $43,000 a year divided by the $150,000 he put down.
Yep.
He's going to earn 28.6%. Look, Blackstone is buying single-family homes, ladies and gentlemen, because they can't find a place to put their cash to earn any money. Now, if a group like Blackstone is going to do it, why aren't you doing it? This show, Cardone Zone, is about money, your economy that you live in, the opportunities that exist, and often, more often than not, particularly on Mondays, we talk about the real estate. Your real estate. Why your real estate? Because you got to either live in it or you're going to make money with it. Or you're going to just live in it and I'm going to make money with it, okay? Cardone Capital is here for you. If you want to do this on your own, I'll teach you how to do it on your own. If you want us to do it with you, if you want to do it with me, do it with me, okay? If you're an accredited investor, you can text me. We're looking at massive deals. We look at big properties. I mean, everything from 300 units to 1,500 units at a time. Massive investments in real estate infrastructure that produces cash flow so our investors can earn 6 to 8% with an opportunity to double or triple their money over long periods of time. It's going to happen. It's happening right now. I've been telling you it's going to happen. I'll teach you how to take advantage of it. And if you don't have the time or the inclination to go learn the game yourself and do the game, find the deal, pick the deal, manage the deal, collect the rents. If you don't have the inclination, the time, the energy, or the resources to do that, you can do it with us at Cardone Capital. Text Ryan, 305-407-0276, 305-407-0276, 305-407-0276. If you want more information like this, more content like this, hit the notifications over at YouTube or turn the notifications on so that you'll get a reminder when I do these shows so you get new content, new ideas, new markets. And each Monday for the next 5 weeks, what I'm going to do is at the end of this show, I'm going to go answer questions from people that I'm mentoring with the goal to have at our 3-day summit. We have a 3-day summit in July. 3-day summit. I've never done a 3-day real estate summit in July. The website, if you want to grab a seat to it, you can either come to Miami. We're almost sold out of the event, but you can come to Miami and be in the room with us, or you can stay at home and watch it on a Zoom call. 3 days, all real estate. You can meet investors there. I'm going to be bringing up superstar guests there that are in the lending market. I'll show you the cheapest money in America. I'm going to introduce you to investors, co-investors. I'll show deals, underwrite deals there. I'll spend 3 days showing you how to build $1 million portfolio if you want to. If you want to think big, I'll show you how to build $1 billion real estate portfolio. The website's grantcardone.com/summit, grantcardone.com/summit, grantcardone.com/summit. Lastly, real quick, today Bitcoin's at 64,000. Ethereum's at $19.95, down from $4,000. Gold 1782, off from almost $2,100 price. Why are all these things coming down and housing's going up? It doesn't even make any sense. You tell me what's going on. Okay, unemployment's down. It's down to 5%. 10 million more people employed. A lot of people sitting home saying, fuck it, I ain't going to work. I'm going to get my check. Okay, and everybody thought everybody'd be going back to work sooner than this, but they haven't because they're getting a check. So that's a big problem in America, by the way. Wages, however, are flat. I continue to grow my company, folks. We've got 180 employees. We have more employees today than we had before COVID. We bought more real estate during COVID than we bought before COVID. I'm continuing to buy real estate because I know it's a good deal. I bought an office building. I bought apartments. What did we buy? About $600 million worth of stuff in the last 9 months?
Yeah.
And I'm going to continue to do that because I know, and this is where I started the show today.
Yeah, before that was 10X Boca.
Yeah. Dude, when you know, then you push it all in, okay? When you don't know what you're doing, what you do is you tinkerbell. You're a dilettante. You're an amateur because you don't know. How do you become a professional? You increase your knowingness. Where do you start? Start where you live. The last thing I want to tell you guys is this, okay? If you're a renter right now, start where you rent. Oh man, I pay $650 a month, okay? And I got this great deal. It's only $650 a month, and the neighbor's $800. You know what? Maybe rather than talking about how good a deal you have renting the place, maybe you should buy the entire complex. Learn how to buy it. Learn how to get investors there. Learn how to get debt on the deal. You might be living in that perfect, ideal place, that opportunity that a guy like me would buy the property, rehab it, and change their rents from not from $650 to $800, but from $650 to $1,100, and then sell the deal to another investor and might pick up $2 or $3 million. Those deals exist in your marketplace when you know what to look for, when you know how to pitch it, when you know what to offer, and when you know where to get your debt. That's what I'll be talking about at our summit. Website's grantcardone.com/summit. 3 days in Miami, or you can stay home if you want to, or you can come meet me. Meet our superstar guests, our investors, lots of investors, probably going to be 1,000 people there, all professional investors, debt meaning banks, lenders, and people that have buyers and sellers for real estate acquisitions, okay? Thank you for being on the show today. You guys that are in our mentoring program, stay around. I'm gonna start answering your questions and underwrite your deals. The only questions that we answer here are from our VIP guests that are joining us for our Grant Cardone Summit. Or do we want the audience here, Johnny, to be able to watch the questions that I'm fielding? Okay, let them watch a little bit of it, Johnny. Next week, guys, Cardone Zone, I'll be taking calls from those of you in your market where you're trying to, I don't know, maybe improve your business, or maybe you want to exit your business. We're doing a big webinar this weekend on exits, how to exit your business for a 10x or even a 100x what the value of your company is. Stay close, stay in touch, okay? Every Monday I do the Cardone Zone. We're always announcing new things that we're doing. Thank you for watching the show today. Let's go to our mentor program.
Look at all these hands that we have.
Beautiful. Okay, I got a bunch of hands up.
And we have Katrina's deal too.
Yeah, we got Katrina's deal. So I'm going to get to Katrina's deal today. Chat box is full. Thank you guys for being here. Appreciate it. First, I want to just a couple people called in last week and said, "Man, you're doing the show to the public, but I thought it was private." Okay, it is private. It's private to you, and it's exclusive to you. And I see you guys in here. And over the next, I guess, 5 or 6 weeks, we will get your questions. The way to get your deal underwritten for sure is, one, make it big and juicy, because if it's big and juicy and you want me as an investor, send me something and say, "Hey, dude, I want you to play in this deal." Okay, I'm sure hopefully everybody here has a deal. Johnny, should I be looking at my computer or here at this screen here?
So you can pick the people on your computer there, and
Yeah.
then just look at them on the screen.
Okay, so... Okay, this is from Julian's phone, and then if some of you got your hands raised, I'll bring you on. Julian says, "What do you think about an 18 or 19-year-old using lenders to buy a first-time deal as an apartment of 32 units?" Love it. Let me tell you, they're going to look at how young you are, okay? What you need in that deal is not good credit and not money. What you're going to need is management experience. So understand that you can have the money. I was competing with a guy on a deal once. He had a lot of money, way more money than I had. I knew I was going to get the deal. They had never bought in the market, number one. Number two, they had no management experience. Okay, even a Fannie Mae or Freddie Mac would be like, "Okay, you could be worth $1 billion, but you don't have management experience. We don't want this deal back." And if you don't know how to manage something, your problem's not going to be your age, sir. Your problem's going to be your management company. How do you fix that? Collaborate with somebody like me. That's why we're doing that summit. You guys that have an opportunity to come to Miami and meet me, come to Miami and meet me. Okay? Let's partner on deals so that you are no longer 19 years old. You're 19 years old with Grant Cardone. You're an immediately experienced, instant popcorn. You're an immediate, experienced, billion-dollar real estate portfolio that you could attach to yourself. How do we get to Grant Cardone? This is from Hope Minio. You just did. Where do we send deals we want to work with Grant on? Where could we send? How about, can we set up an account, deals@grantcardone.com?
Andres, what's easy?
Or deals@cardonecapital.com.
Yeah.
Deals? We're going to set up an email. It'll be set up in about 60 seconds.
Deals at cardonecapital.com.
Deals@cardonecapital.com. And you can send your deals there, okay?
Oh, that's exciting.
By the way, this is a great place for us to discuss all these deals at the summit as well. Mm-hmm. So one of the things we'll do at the summit is underwrite your deals. We'll give you the stage. You get to come up, pitch your deal. So we'll have a chance between now and July 3rd?
Johnny, when's the summit? 17th? When's the summit?
26th to the 28th.
26th to the 28th, okay.
Okay, what has to happen for you to hire non-U.S. citizens? You need to figure out how to come to the U.S. Don't give me the task. Would we invest outside the U.S.? 1,000% we would. Needs to be big so that I can come there and have a footprint. Most important number in real estate. Okay, most important number is the number of units and or square feet. Like we're looking at a deal right now. It's 1.2 million square feet of apartments. What does that get me? It gets me scale, right? So if I can change the value of the real estate by just $1 per square foot, I make $1 million. So I start figuring out, what do I have to increase the rents if I'm buying square feet, right? The square feet's value is the value of the rent. How much do I need to increase the rent? We were just looking at a deal, Ryan and I. I'm going to have to pay a little more money to get this deal. And I start trying to figure out, okay, how to make sense of the deal, right? So I'll show you there's so many different ways. Once you know you love something, you got to know, number one, dude, I love this piece of real estate. I want to go to sleep with it. I want to wake up with it. I want to collect the rents there. I want to visit it. I want to landscape it. I want to paint it. I want to take care of it. I don't mind spending money on it. I love the real estate. Number one thing, love the real estate. Now you got to figure out, how do I make sense of it? So I'll give you a couple ways. Remember the dollar? I gave you that dollar metric. Okay, if something rents for $1,000, you can pay 100 grand. You should run. You should grab a bat, kill everybody on the way to the property and buy it. Okay, so I'm looking at a deal right now. The average rents are $11.67. In a market where the rents really should be closer to $13.70. So the market rents, this is market rent, and these are effective rent. I'm answering a question right now from the chat. Okay, so I'm like, okay, there is some opportunity. This is the gap or the delta. The delta is there's a sag here. The sag or the delta could be for a couple of reasons. The most obvious reason, okay, could be, oh man, it's a bad economy. Could be. It could be a bad operator. Or it could be the economics of the operator, okay? So there could be many reasons why the rents are down. But one reason could be, oh, a terrible economy. Second reason, it could be more supply, maybe more supply than there is renters. So even though the market should be $13.70, it sags or softens the rents. The other reason, though, it could be the owner's economics. And the owner's economics, and this happens a lot, okay? This is the perfect deal you're looking for. These are the owner's economics and or motivation. In personal development, we talk about the why. What's their why? Well, their why is they paid what a door?
140.
140 a door.
Ish.
They paid 140 a door and they're getting 1167, okay? So 1167 divided by 140 is an 83. Look, remember what I said to you, okay? I said, if you get what is it, the 10%? What is it?
The 1% rule.
The 1% rule.
Yeah, $1,000 for 100 grand.
The 1% rule. Well, they're at 83% of the 1% rule. Okay, 1%, right? For every $1,000, if you can pay 100 grand for the unit, you're not going to be able to find $100,000 units anymore. It's gone. I was telling you guys to buy those deals 5 years ago, and you didn't do it. Now, he went in and paid 167, but they bought this massive portfolio when they did it. So I'm sitting here saying, okay, I got to pay for that same product. What do I need to pay, Ryan? What's our number?
Per unit, 167.
$167,000 per unit. Okay, and they paid $140,000. They're at 0.83. Let's see what I'm at. You guys following me right now? I know you could get confused, okay? So I'm going to take the 1167, divide it by my price. That's his price, 140 a door. My price is 167 a door. He wants to make money. He's going to make a lot of money on me. Now I'm trying to make sense of the thing I love. I can't get it if I don't buy it. Somebody is going to buy this asset. There are 8 other groups going to buy this asset. It's going to be me or it's going to be one of the other 7 guys. They're not stupid people. And that's the beauty of dealing at this level, because you're not dealing with stupidity. You're not dealing with emotional people. Somewhat emotional, but you're dealing with people that are in it to make money, period. Okay? So if I divide the 1167 by 167, I'm at 69% of the 1% rule. What did I say about the 1% rule? If you can find 1% real estate today, you need to take a bat, get in your car, run over everybody in your way, and club them on the way over there to make sure nobody else gets that deal, because that deal is going to be a screamer. Okay, and that's true in almost every market in the world. Okay, but I can't get to 1%. They didn't get to 1%. Why would I expect to get to 1%? They love the deal. It's a great deal. It's a great asset. It's a great location. It's a great market. Why are they at 1167? Because they don't need to be above 1167. Okay, so here's another way to look at it. They're at 1167. They're making money at 83% of the 1%. Is this too complicated for people, Ryan? A little bit?
It's getting pretty deep, yeah.
It's getting deep. Watch this. What do I need? I'm at 69% of the 1% rule. You guys got to know how to make sense of it, man. This is math. Okay?
You know, when I first joined your team 7 years ago,
yeah.
I said if I could just figure out your math, I'll be a genius. Because you
totally. So
you're
I'm just
simple.
So this is simple.
It is.
This is simple.
Yep.
So watch. They were at 83 of 1%. They're going to make on this portfolio. They're going to make 27,000 a unit.
And while you're doing that, so
they're going to make $38 million on this deal.
Yeah.
Okay. And now I have to make sense of, is it cool to pay them $38 million? This is what people that are in business say, like, well, why are they selling it? They think that,
everybody should be buy and hold.
It should be, they should never sell it if it's a good deal. It must be something wrong with it. Like,
right.
Why are they, it's not, dude, I'm not getting a divorce. I'm making money. They want to make money. This is how they run their fund. They make money. They keep a deal 6 or 7 years, and then they sell it. And sometimes they make money. Sometimes they make a lot of money. Sometimes they make a little money, okay? I have to make sense of, do I want it or not? This is so simple that, like, do I want to own this? Do I want to wake up with it? Do I want to go there? Do I want to paint it? Do I want to landscape it? Do I want cash flow from it? So now I'm trying to make sense of, okay, if I buy it and don't do anything, what is my return? And/or what do I got to do to get a little more, okay? Now, they're at 1167. What would I have to change the rents to get to 83%? I'm just going to pick a number. I'm going to pick a number like...
what was the average, 1167?
The average rent there is 1167. I'm going to pick $50. 1167 and $50 is what?
1217.
1217 divided by
167 is a new
the 167 price that I'm paying per door. I'm at 72% now. Whoa, man. For $50, baby, I got in the neighborhood. Man, what if I get another $50, right? So now I'm going to go 1267. Oh, by the way, the market rents there are 1370. Why is he not at 1370? Because he don't need to be. He don't need to be, and he can still satisfy his investors. That's what I'm called owner economics or owner motivation, okay? So you're looking for the owner's motivation, the last owner, not yours. I'm going to go over all this in the summit, by the way. We'll spend 3 days talking about this. And the goal of these calls each week is to prep you to get your mind a little molded about how I think, okay? So let's go to 1317, still $50 below the market rents. 1317.
No, 1217.
Oh, yeah.
Are you doing another 50?
1367, 1367. No, 1267, sorry, 1267 divided by the 167. That's what I'm paying per door. Oh, now I'm at 75%, okay? So I'm getting in the neighborhood. So I know I can get there. Now what I got to do is just do a little more homework on that property. Does it work for me? What would I have to change the rents to get the return I need, okay? Do I want to be in that location, okay? Do I know what it costs? Do I know what the homes, by the way, are now, and always have been really, competition to the apartment market. So let me just go back to my Zillow right here. You see this house right here? That house is going to be competition.
What's it going for?
So my rents, I'm not going to show you the asset I'm buying right now just because my rents right now, because I haven't closed the deal yet. My rents are $11.67. I'm actually showing you in real time an underwriting of a deal I'm trying to do, okay? This house is $745. This house is much, much nicer than what I'm showing you right now. I have 1,000 square feet, just under 1,000 square feet, less than 1,000 square feet. This house is 4,300 square feet, okay? Okay, is it a fair comparable? I think it's a fair comparable. Somebody's going to look at it if they're qualified. But watch what happens here. 745,000. This is a jumbo loan, right?
It is, yeah.
He has to put $150,000 down.
Okay.
Okay. They're going to finance $600,000.
And $150,000, that's real money.
Dude, that's a lot of money, bro. Like, there's nobody living at any of these units that has 150 grand sitting
Liquid, right.
Okay, so that's where it's not competition anymore. I'm out of the competitiveness because that's not the right house. So now I'm going to go back to a house in that neighborhood. What zip code should I be using, Ryan?
Let me
For what I'm talking about.
let me just get it for you.
Let me see here. And then I'm going to go to another question, okay? But I'm showing you guys the different ways to look at a deal.
77
469.
469.
What?
469.
Oh, 77469. 77469.
Whole lot of sugar on that zip code.
77469.
We've got Katrina's deal, and then we also have a bunch of these hands here too.
Okay, so here's the deal. 77469. 2,900 square feet. How much is this? Why'd they shut me out here? No, let me see.
I could tell you next to our other deal.
Oh, there's 583. No, this is the comps I wanted. 583, 678, 595, 634. That shouldn't be in there. Go ahead, Ryan. What were you going to say?
I was just going to say next to sell it's 600 to 1.2.
Yeah, $600,000
to 1.2 million.
To $1.2 million.
Starter
So
homes.
those are the neighborhoods. So if you want to live in this little neighborhood that I'm in, these are the comps. Now I'm going to comp the homes. Now I'm going to comp the rentals. I'll go back in here and look for, okay, I want to rent in Sugar Land. What can I rent for? Okay, let's see. Oh, here's a place I can rent for. $2,000, 1,900 square feet. I can rent for $2,000. That is definitely a comparable and competition to what my rental is. Okay, to what my deals are. You got to know. The point is, you got to know your market. Know you want to be there. And know how long you want to be there. Okay, I got a deal from Katrina. Let me see that deal. And this deal, she sends me an email. Because I closed my...
I've got Katrina on the Zoom as well.
Oh yeah, go ahead, Katrina. Tell me about your deal.
Let's see here. Johnny, is there a way we could search Katrina? Let me see if I see
Give
you.
me 1 second.
Awesome.
Do you know her last name? Because there's two on here. Katrina and Katrina Ostby.
Katrina, who sent in the deal, can you raise your hand, please, on Zoom?
I had it.
You did?
And I blew out my...
She had sent me a DM as well.
I blew out my notes for the day, guys. Sorry.
Oh, you did? It's fine. Katrina, if you are on Zoom,
let me see. She sent
we're
me the
going to
deal.
pull your deal. Let's do this. I'm going to do the Katrina in the blue, the one that has video. Let's see if she's the one who had the deal. Hey, Katrina, you just unmuted you. Did you send us the deal?
Yes. Can you hear me?
Yep, got you loud and clear. You want to tell us about it?
Okay. Yes.
I just found it too.
Great.
Go ahead.
It is a 352 unit deal in Arizona.
Okay.
161 of the units have been renovated, and 191 units are still unrenovated. So 46% are done, 54% are still left to be upgraded.
Okay, so let me just make a point. These people went in and rehabbed this building, okay, and they're doing exactly what I tell you guys to do. When you go rehab, never rehab the entire property. You will never, ever rehab the entire property. You will rehab 50% of it or less, and leave the rest of it for the next guy to tell his story, okay? Like I know properties where they'll take out of 352, they'll take 3 of them, rehab them, and then tell the story. Oh my God, we raised the rent $600
So much
on
upside.
all of them, on every one of them, 100% of every one of them. That proves and validates there's an opportunity. You can find 3 people. Anybody can find 3 people to pay more rent. Okay. What is the price? Do you have a price on this deal?
No, that's the problem. CBRE wanted market and an all cash deal.
Yeah.
So I had to come up with what I think the market price is, and
show the deal, Johnny.
I came up with one.
Okay.
43,795.
43,795.
Right.
What is that? 43.
43,795,000
Okay.
is the price.
Okay. And how'd you come up with that number?
I came up with that number by taking a look at the comps that are in the OM, and then talking to the broker, finding out what the cap rate probably is, and just doing a lot of research and comparables. And I came up with 124,000 per unit.
Yeah, right.
How much is it?
124 unit. This is in where in Phoenix is this?
Glendale.
Glendale.
Okay, and how's Glendale as a market?
Okay, I'm glad you asked. As a market, I'll tell you in 1 second. Let me pull it up. So right now, as far as cities go, over the past, Glendale has a population growth between 2000 and 2019 of 15%. So that's average. Their median household income between 2000 and 2019 has gone up 27%. The things that are really good, the median house has gone up 113,300 to 241,100.
Yeah. Hey,
So
Katrina. Hey, Katrina, though, when you're giving us these numbers, though, what is it, though? What's the average median income? Because I know it went up, but what is it? What's the...
the average median income, hold on. I think it's 57,137.
Yeah. Okay.
right
So,
now.
and this is what I said in the earlier show. The average income in America is $57,000. So what? Then you got to take from that cost of living. So home prices are getting jacked up in Phoenix. Land values are getting jacked up because California's coming in, because California's buying those homes and California's buying the apartments, and the investors are buying that stuff. That's not the locals doing this. The local wages stayed flat. Many of those people are out of work. They're earning $1,400 or maybe $2,800 a month. Okay, so that's who your renter's going to be. You buy this deal. When California quits migrating to Arizona, once they spend the summer in Arizona, they're like, yeah, that maybe I want to go back and pay taxes in California. Okay, so after they get the heat, they get some of that 117. They're like, shit, I'm gonna go back to the 17. So $57,000. Your tenant can only pay
Because it's 3
about
times, right? 2.5 times.
taps out around $1,700 a month, about 3 times.
1,700
Yeah.
times 3.
I mean, you're stretching them out at 3 times.
Yeah, so 3 times is 5,100 a month.
Yeah, there you go. And I got there, right?
Yep,
So,
yep.
so how much is it a month?
That's 61,000 a year, 61.2. So 5,100 per month. So 3 times.
Yeah.
No, you're right. So $1,700.
Yeah,
is right.
yeah, it's $1,700. Now, these rents are how much on this place?
Well, the average comes out to 900.
Yeah, the average rent's $900, but the place also looks like a $900 a month place. I mean, it's nasty. Looks like an old motel that was converted. Now, I don't know about the location. I'm just telling you what it looks like to me. Like when I look at it and I pull it up.
Do you have the OM?
Yeah,
Because-
I'm looking. I already looked at your OM, but now I'm looking at what they did to it. They did the lime doors on it, the lime fence, They got the, they got the water moving in the pool. I'm looking at their website right now where they rent.
Glendale has traditionally been a C market.
Yeah, it's typically been a C market. It could be getting better, but you got to understand in these markets that are really hot, right? They're hot. Tremendous activity going on. Okay, here's the rents on a 122 unit number 122 studio, $630 to $750 with $250 on approved credit. Available now. Do you know what their occupancy is, by the way? No, you don't. You only know.
No.
And by the way, you wouldn't. None of this do you know for sure because it's in the prospectus. And I tell you, never ever depend on their prospectus, right? So here's a 1-bedroom, 1-bath, $770 to $870. Here's a 2-bath, $1,000 to $1,165. Available now. Here's another unit, $870 a month. So why are the rents set $870? But this person can afford $1,700. The median income that you talked about can afford $1,700 a month. They're building a lot of new product in that market. The person cannot afford a home, and they're making 57 grand. They're like, you know what? Let's go get something with a really, really slick pool, great security, etc. Okay? Why are they going to be at $780? Because they only make $30,000 a year. So remember this, Katrina, when they say median income is $58,000 or $57,000, half the people make less than that and half the people make more than that. That's how you get this number. Some of these people are making 30 grand a year. Right? They're working in a restaurant, they make $2,500 a month, and that's your renter. Okay, $2,500 a month now, because you're going to have to check their credit. Every person that comes in, you got to check their credit score, their criminal score, the down payment, their credit, their renting history. Like there's a lot of work goes into this stuff. That's why you need a team. That's why I like the number of units you got here. And then I'm going to do the math on this deal. This person can now afford $800 a month based on the 3-to-1 ratio. Mm-hmm. Meaning I earn $3, I can pay $1 in rent. Some places in America, like in the Californias, there's people there, they make $2 and $1 goes to rent. People at Facebook are paying, they make 200 grand a year, are paying half their income in rent. Okay, now let's go back to the numbers on the deal. This deal's $48 million the way you underwrote it, or thereabouts.
43.
Or 43.
Oh, $43 million? Okay, $43 million. You got to put $11 million down to buy it. You're going to finance $32 million. The rate's going to be about 3%, right?
It's an all-cash deal.
Yeah, I understand. That's because you're reading a prospectus. I'm going to close with all cash. It's going to be Fannie Mae's cash and some of mine.
All right.
They didn't say it's got to be 100% of your money with your name and your face on it. So we're going to finance $32 million. We buy every one of our deals with all cash. Your payment's going to be $1 million, $1,008,000 a year. What's the NOI on that deal?
Let's see.
Okay, the annualized rents are $4.2 million is what your thing says, and I think you're going to keep about 52% of this, 52% for the NOI. Let's see, 0.52 times.
So at $800 in rent,
Yeah.
at 90, I think it was 94%, I came up with an NOI of 1.9. That's
so-
my NOI though.
Ryan's coming up with a 1.9 NOI. Okay, Ryan, you want to tell everybody how you did that? 352 times.
So I had 351 units. I think she said the average rent was $800.
Yeah, times 12.
Times
what,
12,
90%?
and then 90. Let me do if I did 90. I think I gave it 90%.
No, give it 90%. It's not 95. They got so much new product in Arizona, guys. Don't you can write to 95 later, right in the beginning. The deal we're doing in Houston right now, I'm writing at 88% effective rents, meaning I collect 88 pennies of the dollar I should have gotten because of concessions, problems, situations.
Okay, so
Okay.
it's three. Let me see.
So I'm going to take 352
Okay.
times 800 times 12 That means I'm fully collected, okay? Every person paid me $3.379 million times 12.
No, times 90%.
Times 90%. Okay?
3 million.
3,041,041.
And
$41,000.
And then
they said their annualized rents are $4.2 million.
Okay.
Could be. Okay.
And I'll throw in some other
I think
income.
that's a little high. They always say it's high. I got other income. Other income typically on a deal this big is going to be about 3 or 4%, not 5 on these older deals.
Yep.
Plus other income, OI. And again, we're going to spend 3 days in July going over all this. And every time, unlike the Zoom calls, every time someone has a question, a hand in the room goes up, and then we know, hey, let's go address that. So
4% is 121.
So maybe another 120,000, and there might not be that much other income on this thing. There could be more than that. They're doing laundry, like the old laundry mats and the old, today we don't do all that stuff. Typically, we're buying apartments, the washer and dryer's in the unit. You're not collecting quarters. But you are collecting $50 for VIP parking. And we're collecting, $500 a month for the little office live and work office setting, or the little podcast room that we set up and somebody wants to rent privately once a week. Okay, so now I'm at
so you're at 3163.
3163.
And then expenses.
We're going to take
5.
No, you think not there?
I think expenses are 45%.
Yeah. Okay. Ryan wants to take 45% for expenses and leave 55% for the house. So
1740.
Is that the NOI?
Yep.
The NOI.
Yep.
1740.
Yep.
So you took my expenses out?
Yep.
Okay. So and my payments are going to be $1,080,000 a year. That's my interest payment only. Interest only. I did interest only loan, and I'm gonna make $660,000. What'd I put down? 10 million.
10 million. Yep.
And I'm making 6% of my money. And at 6% of my money, I want to go buy a different asset class. Okay? For 6%, I'm just telling you, I would not buy that deal. I would buy something nicer that needs less work. I don't think they're going to get the number that you're saying, that you underwrote to. I think you're being a little aggressive. Or maybe they do. Maybe they actually kill somebody. Let me tell you what could happen here. Somebody in California could have a 1031. They could have $30 million worth of profit, and they're like, let's go bury this in the desert in Phoenix.
Yep.
And because they don't want to pay the gains on the $30 million.
And they're looking at 126 per unit as relatively cheap.
But I just want you, I know you know what that deal looks like, right? I want you to compare that deal to this deal. If you were going to earn 6%, do you want to be in this deal I'm showing right now, or the deal you're looking at?
In your deal.
It's the same 6%. For everybody watching right now, like same 6%, same tax deductions, same income, less headaches, no problems, no threat, no recourse, some of you, I know you guys want to do it yourself. In real estate, you do nothing by yourself. Just for everybody to understand this very important point. Yep. Real estate is a game you cannot play without partners, okay? The partners in every deal I do, number one partner is the tenant. I mean, really, before that, I got to have the seller's got to be my partner. The seller's going to sell to me. We also have to partner. I got a tenant. I got the debt. The debt is the big. This is the biggest. Number one partner. Number two partner is the debt. I need a tenant, a floating tenant that's going to change all the time, be changing. If I can keep 50% of these people every year, I'm freaking shocked. Okay, like if I can keep 60%, cool. But most of that's moving. It's a moving, infinite flow of people coming in and out, okay, saying good and bad things about the property. Then I got the debt. This debt, I'm living with these guys till the end. 10 years from now, it will be the same damn debt that I had the first day, the whole time they're there. When COVID hit, man, my debt was calling me before my tenants were. The tenants didn't call us. Fannie Mae called us. Y'all cool? Freddie Mac, you guys all right over there, over at Cardone Capital? Okay, Teachers Credit Union. Hey, we'd like to come visit this week. How are you guys doing? You know, they don't want to ask us, they want to see us. So the debt is your partner. Then you got your investors. And this is the order of how you handle people. First you handle the property, that's the tenant, then the debt, then the investors. So when COVID hit, first thing we did was we stopped the investors' cash flow. We said, hey, cash flow's off the table, man. I got to take care of the property, the tenant, and the debt. Because if you don't take care of the property, the tenant, and the debt, you're not going to have the property. You're going to lose it. Now, I've been through 35 years of doing this. I've never lost a piece of property. Pick the right property, take care of it, take care of the tenant, take care of your debt, and you will always be able to take care of your investor. Hope you guys wrote that down. Okay, next question. And Katrina, thank you for sending that deal. If any of you want to send your deals to me, I'd leave that deal alone. Number one. Number two, at what point would I be interested in that deal? Okay, because that's the other thing to say. Everything is a buy at some point. Okay, where would I be willing to buy that deal, Katrina? Okay, number one, the first thing that I'd have to really understand about a Glendale deal or any deal in Phoenix, any deal in Houston, any deal in Atlanta is the location. Like, do not compromise location in markets that are flat. If it is flat and they don't have boundaries on both sides, okay? Like this is a boundary. It's a big boundary, okay? You know what boundary that is? This is Miami right here. That's ocean right there called H2O, and here's more ocean right here. It's a bunch of swamp. And between here and here is the only places you can build. And you can't do this on the beach because that's all condos, all $1 million, $400,000 units. So I have barriers to entry. Okay, I got big barriers to entry. If I take California over here and I do California like this, you're going to see the same thing. I got mountains right in the middle of this thing and I got H2O on this side. So what it does is it compresses that market. And almost no matter what happens in that market, the values just keep skyrocketing. Okay, New York City, same thing. New York City will not be killed because of COVID. Right. New York City, in the next, when they figure out their politics there, people will pour back into New York City like you've never seen before. Just like after 9/11, property prices just went through the moon. And they will go back there. They'll go to the moon before Dogecoin will. Okay? So when you got barriers to entry, you don't have those in Glendale. Oh yeah, but the Indian reservation just south of that can never be built. Trust me, the Indians will sell that property. Mm-hmm. They will unload the property. The government will sell their property. The U.S. government will sell their wildlife parks when they need to. Yep. So it's already been discussed before. So you're looking for barriers to entry. Barriers to entry might not be the geographics. It may be the politics of the land. Like we're not building anything else ever again here for whatever reason. Okay? All right. The liberals tried that in a lot of markets and end up inflating, actually gentrifying. Is it called gentrifying? They basically increase the prices of the property so much that the people that they try to protect can't afford the property price because they took the supply out of the market. When the supply goes away, the prices always go up. All right. So Katrina, I could find a place where that deal would be cool for me, but it had to be more than a 6% return. Like if I couldn't earn 10 or 12% on my money on that deal, I don't think that it would be worth it, and I don't know that you'd have an exit.
Yeah.
Go ahead.
No, I was just going to say I backed into a 5.5 that would give you somewhere above an 8 cash on cash. Yeah. And it was $31 million.
Yeah, $31 million. Now I start becoming interested, but I still don't know what my exit is.
Yeah.
And the fact that they only did half the property makes me suspect. I know what they're doing there. They're looking for an amateur investor to whack. And I don't want that to be you. I feel like they're doing, what's that lady's name that did the Tiger Show? This is like a Carol Baskin deal.
Oh, Carol Baskin.
Carol Baskin.
Uh-huh.
Okay? Fixed half of them and then whacked them. Mm-hmm. You know? Fixed half the units and then they whacked them. Okay?
Can I just add one thing for Katrina's call?
Yeah.
Hey, Katrina, so when you initially came in, you said, hey, the broker didn't give me a price. For everybody on this call, when you guys call the brokers, just make sure, we always say, what's the guidance pricing on this deal?
Yeah, expectation, what's the expectation?
They should always give you a price. You shouldn't, the goal is to do less work, not more work.
Yeah, and one thing you guys got to learn how to talk the language of these brokers, okay? Like don't, you call them and say, hey, how much do they want for it? That's not the right question. What's the expectation? What's the BOV? Explain to them what BOV is.
So BOV is the broker opinion of value.
Yeah.
And so the broker goes in there and says, hey, owner, this is the value of the property. They usually have a low, a strike, and then a high. The strike price is what they're typically going after. But these brokers, they become your partners and your friends. Like, you want to speak the language like Grant was saying, so that way they take you serious. Because a lot of these guys, they have a lot of people calling them, and they don't take a lot of people serious. So knowing knowing the vocabulary, knowing the language is going to help big time.
Very, very important, because it gives you credibility. Money is not credibility until you talk the language. And then they're like, oh, wow, okay, he talks the language and he's credible. Let me just tell you, most of the people that are buying real estate today don't actually have any money. Blackstone doesn't have money. They have investors' money. They have tremendous credibility. So much credibility, they don't need the money. The market assumes that Blackstone can come up with the money. Manu wants to know, have I ever sponsored a foreign person? Just so, Manu, first of all, this is a real estate show, but yes, I have. Yes, I have foreign partners. Yes, we have foreign licensees. There's a lot of ways, rather than me just making you employee, for me to work with you. But the first thing to do would be appropriate in the appropriate spots. This is a real estate show, asking questions about real estate. So again, keep your credibility up by communicating at the right time about the right topic. Because right now, what is everybody talking about? We're talking about real estate. People are talking about deals, okay? Mm-hmm. Does the deal have to already be negotiated and under contract? No. But you also don't want to call me like the calls we get. I know a guy. Yeah, bro, we know a guy. I had a guy stop me at Starbucks the other day. Ryan won't call me back. Ryan won't call me. Nobody at your office will call me back. I'm like, yeah, okay. Well, it doesn't surprise me. Maybe what you're saying in the call has everything to do with why they're not calling you back. Well, that's how I work. I'm like, don't sound like it work at all to me. So I'm like, you know the little short dude?
Which one?
Anyway, I see him at Starbucks all the time. And he's like, I know a guy. I said, dude, what do you want to talk to Ryan about? Maybe he's not calling you back because what you're telling him is a waste of his time. Man, I know a guy that's got a portfolio in Texas. Where in Texas? I don't know. I said, that's why he's not calling you back right there. You don't know about the deal. You know about a guy. And you're not doing this full time. You're an amateur. You think you're going to get a little fee out of the deal. Brian's over here laughing right now. We hear it every day. Every day it happens, and it doesn't have to happen if you all know how to communicate and what the buyer wants. I am a net buyer of real estate. Okay, we will sell maybe one deal this year and try to buy 10. If I don't sell any deals, I don't care. I want to buy deals. So we are positive, bullish on buying deals. And so all you guys got to do, hey Grant, I got a deal. I know what it takes to get it. I have connection with the owner. They know you. They would sell to you. Okay. And then, I mean, it's got to be something more than I know a guy, because we already know a guy. We probably know the deal. We've probably seen the deal. Okay.
Most of the time I get these calls too. It's like, hey, there's a really amazing deal, and there's no numbers, there's nothing behind it. So it's like, hey, at least have the NOI, at least know the story behind the deal.
Yeah.
And if anybody wants to send us a deal that's real, like a really, really real deal, it's deals at Cardone.
Deal at CardoneCapital.com.
Is it deals or deal, Andres?
Both. Put them both up.
Both?
And
Okay,
how
it's
about
deal?
Deals or deal? Deals or deal? Either one will work. Dildo will not work, okay? Ask to unmute Jeff Cassell in Texas.
Okay.
And if you guys got a screamer, man, you guys that know about screamers, man, send me the screamers.
Okay, Jeff, you are unmuted.
But most of you guys that have screamers are dreamers. Yes, sir. What's up, Jeff?
I've got an HOA property that I'm involved in, and the HOA is not doing very well. It's failing, really.
Yes, of course, they all
fail. It doesn't have enough
fail.
money to pay its bills.
Yeah.
And the question I'm trying to determine, I've owned these 14 condominiums for probably now 20 years, and I bought them very inexpensively, like $30,000 a door, and they're worth probably $125 a door.
Okay.
So it's about, I'm just giving the average size because it's 1.9 million worth of property, I guess.
Beautiful, man. So you got $540,000 all cash paid for, done, and the HOA's failing.
Yeah, the HOA's failing.
Yeah. How many units in the entire complex?
60 units. I own 20% of the HOA.
Uh-huh. And how many units do you have? 30 of the 60?
14.
Oh, 14. Okay. 14 units.
14,
Okay.
14 out of the 60.
Yeah.
My rents on the things are on average $12.95, and that includes the water.
Yeah.
I've got to pay taxes and insurance and everything.
Yeah.
But these have been paid for a long time.
Yeah, Jeff, what market are you in?
Arlington, Texas.
Yeah, what I would do is I would try to package the entire thing on one profit and loss statement. I would advertise to one investor. So you're 14, you're just going to basically create a profit and loss statement. You're going to have 15 of them. You probably have a profit and loss statement for 14. You're going to make up one more. Follow me? You're going to make one up. A profit and loss statement for 15, number 15, profit and loss statement number 15 is all the units together. So you're going to take their $12.95 rental income times 14 units. Is it 14 or 15?
What'd you say, Jeff?
14.
14 times $12.95 times 12. Oh, that was wrong. 14, let me see. 14 times $12.95.
It's $18,130.
Yeah.
Times 12.
Okay.
Times 12 is $217,560.
Yeah, and then you probably you know whatever your water costs, you probably don't have any expenses. Are these long-term tenants?
They're all 1-year tenants typically.
Yeah, so the whole place is full. Your expenses, because you're doing it yourself, are probably $40,000 a year or something. They're probably nothing. No?
The HOA bill.
Oh yeah.
There's HOA bills that I've got to pay.
Okay.
And so they're $43,800.
Okay.
My special assessments on that are $7,000. So there's $50,000 pretty much.
Got it. I'm adding them up. What else you got?
And then my taxes are $45,000, and
Texas.
I pay my company basically a $25,000 for property management.
Well, yeah, you're not going to show them that because that's between you and your company, right?
Right.
So now
Yeah, of
you're NOI on this deal. If I got everything, I think you had water in there too. You got an NOI.
Water's included in the HOA.
Okay, good. So you got a 102. We got a $122,000 NOI. Where are you in Arlington? I'm going to go a 5 cap. I'm going to go a 4 3/4 cap. And would you be happy to get $2.6 million for the property?
Oh, absolutely. I'd sell it in a moment.
Yeah, and they're going to make 9% of their money. So I'm going to advertise, guys. I have this is going to give you a 9% cash-on-cash return. The HOA fees are handled. The management's handled. The properties are full. You even could do this. You could even take and rehab one property, spend $4,000 on one unit. Okay, take just one unit, one special unit, spend $5,000 on it, and change the rents by $500 because it's got a backsplash and new floors and really cool. Mm-hmm. And tell the story. Hey, by the way, this is the actual over here. This is the actual, the 122. Mm-hmm. But if you did that $500 increase to each unit, 14 times 500, mm-hmm. it would increase times 12. It would increase your NOI by $84,000. And we have already proven that every unit we have done this to has taken the price increase on the chin. Happily. And they'll be like, oh, fuck, I'm going to make a fortune here. But the only way this works, man, is get them off of one financial statement, get them off of 14 separates, put it on one financial statement, and you go for a professional investor.
Like a chiropractor or a doctor.
Chiropractor, dentist, Brandon, my partner Brandon, some guy that's got some other job that now thinks because Grant Cardone makes real estate look so simple, shit, it must be simple.
But he wants to do it by himself.
But I'm gonna do it by myself because I am a by myself kind of guy.
I gotta control everything, guys. Hey.
And that cap rate, the 122 is based, Harold, on a 4 3/4 cap rate in Arlington. I think you get it.
Arlington, Virginia?
Yeah, Arlington, Texas.
Oh, Texas.
Friggin' hot market, man. Supermarket. And really what's going to make the difference on this deal is how you guys advertise. You could advertise, the guy that could buy this could be a 1031 exchange out of Cali. Man, this thing might bring 3.2 million right now.
Yep.
And he'll regret ever buying it from you, just like you regret owning it. See, this goes back to the gentleman that was just on from Texas. The owner economics and motivation. His cost basis, this is called cost basis. His cost basis is exactly what he started with. He started telling me about what he paid for the property, right? Didn't he tell me that?
He did, yeah. I think it was what was it, Jerry? 30 grand?
Yeah. Is that Jerry gone? You dumped him, Johnny? Why you jump my guy, man? I'm showing my guy how to make money. Johnny, why you dump my guy?
30K per door.
Yeah, 30K per door, right?
He's back on. He's back on.
And this is called the cost basis, right? This is called the owner's economics. All Jerry's thinking about is his economics. And it's really not the right way to think about a deal. You want to think about a deal not what your cost is, but what the market, what the new buyer, this is what's called the exit. I spent probably a third of the program at the program that you guys have, how to create wealth investing in real estate, on the exit. How do you figure your exit out? Because this guy's not thinking about what you're making. Now the last thing you need to tie into this is the basically the cost per unit. You know, if you got 2.6 million divided by 14, you know, because this guy's gonna check that.
So divided by 14, it's 185.
So it's 185 a door. I don't know if it can bring that. You're going to see the other condos in your building, you know, because that's why I hate condo buildings, because you got a guy next to you that's willing to sell for 130 right now.
Yep.
Yeah, I think it's probably worth max 140 a door, 145 a door. But I do have another one that I'm working on right now.
But let me just say
to
this,
buy.
Jerry, that investor's not going to look at that guy because he don't want one. Nobody wants one condo in that building. People want 14 of them. Because now he's like, I got 14 checks coming in every month.
Right.
See, investors want something different than owners. So when he's like, you're $40,000 higher than the guy down the street. Yeah, bro, you ought to go buy the guy down below me. Once you buy my 14, you ought to go buy him. Because you know. And this is where you guys have to learn how to negotiate. He's like, that guy's selling for 140. Buy that too. You're fucking stealing it.
Right.
But by itself, it's not worth having. Now you got 15 units. His goal really should be to own the whole building.
Good point.
Because once you own the building, you get rid of the HOA. Because your only problem with that building is a failing HOA, and all HOAs fail. Every one of them fail. There's no successful HOA in the world today. They all end up failing once the owner gives it over to the new owners to decide what they should do with the building. The decision will always be, let's fuck this place up as fast as we can.
Yeah, because everybody has no money and nobody cares about this or that, and they want you to spend the money on it because I'm the majority owner. But you know what? I'm paying the same thing everybody else is paying.
I was having this conversation with a guy last night. He's buying a deal over here, and he's like, oh, they take care of this, and they take care of that, and they take care of this. I said, yeah, until you got to.
They don't.
Right.
Okay.
They'll take care of you eventually.
Oh my God, the amenities are amazing here. Yeah, wait till they get rid of them. Why would they do that, man? That's what they're selling me. Trust me, they will get rid of everything. The espresso machine will go. Okay,
Right.
The butler will go. Okay, the good morning, nice to see you here. That will be gone soon.
On these calls, you should have a buy-sell button. What button would you hit right now?
Right now, I would be, well,
For Jerry.
on the advice. Oh, I would definitely sell this. Get rid of this, Jerry. You don't need this shit, dude. You know you don't need it. Like, you paid 30 grand a door, man. Go ahead and pick up what'd you pay a door?
30, you pick up 100 each door.
Pick up 40 grand a door and move on. Like, I'm giving you a great place to start from. The story just gets better and better as you drop the price. The story to the exit it gets even better. But at least I showed you a way to get out. But do not try to do these one at a time. Anybody out there? Any of you out there? Wow, I love that, Johnny. How do you do that? Johnny, how you doing that? I gave him 3 ways, Johnny, and yeah. Okay, so you guys are trying to soak all this in one show. Do not try to do that, okay? Don't try to get all this in one show. I didn't, and you can't. It's impossible. If you try to do that, you'll quit this game. So just let me hit you every week with it. Your job now is to go back to the program, How to Create Wealth Investing in Real Estate, and keep listening to me. You should have me in your ear all the time. You don't need to be on Clubhouse or Green Room right now. You don't need to be watching Instagram Lives. You need to be learning about real estate. Let all those other people give advice on Clubhouse, okay? You just need to be in there learning the whole vibe over and over. That's what I did. Okay, I didn't.
The one that really pays off is you have these questions that you ask the brokers. There's like 15 questions that you go through.
Yeah.
Hey, when's the last time it traded? Who's the seller? Tell me about the debt. Tell me about the deal.
Yeah.
Tell me about all that stuff. That list alone is worth its weight in gold.
And make sure you send your deals. Deals at grantcardone.com. Send your deal. Ryan will see it. I'll see it. Andres will see it. My team will see it. I'll make sure I can bring it up next week on the call. What you're doing in these calls each week is preparing yourself for the July summit. Make sure, many of you have not confirmed that you're coming live. We are going to oversell the live seats. So if you want to be here, you want to meet investors, you want to meet some of our surprise guests, you want to meet me, you want to ask your questions in public, you want to meet investors, you want to meet lenders, all those people will be at this event. It's going to be phenomenal. I do the nicest events in the world. They're very high class. You're going to feel great. You're going to be around unbelievable people, super positive, great networking event, deals from around the world. You're going to see how people are looking at deals, how they're accessing deals, how they're getting deals. You're going to hear about people's mistakes. But most important, you're going to be putting yourself next to professional real estate investors. And the best way, fastest way to become a professional, whether it's golf, basketball, baseball, dancing, the best way to become a professional is to mingle with professionals. Okay? So my preference is for you guys to be here live. If you can travel, come out, come be there. I look forward to meeting you. I want to hear about your deals. It's an amazing masterminding event. Proximity is power. Miami's going to be fantastic. We do great events. We'll put on a phenomenal event for you. And I want to meet you guys, all right? Okay, your homework this week. Take where you live, underwrite where you live. Whether it's the house, the condo, or the apartment. Underwrite the building that you're in. You don't need to even leave. Underwrite your house. If you live in a house, underwrite it. If your house is paid for, underwrite the equity in your house. What is the return on the house that you have right now? Okay? If you live in a house that's $200,000 and that house is paid for, underwrite the cost of living in that house. Okay? If you rent something for $2,000 a month right now and you're renting, underwrite the building you're in. Okay? Underwrite, find out everything you can about both these situations. This is paid for, this is a house that's paid for, and you guys think, oh my God, my house is paid for. Well, so what? It ain't paid for because you got $200,000 worth of equity sitting dead in a house dying. It's like you got 200,000 Benjamin Franklin sitting in a damn house that don't even work for you anymore. Because this should be paying you at least $12,000 a year. Instead, you're feeding it probably $25,000 a year. Or I don't know, maybe $15,000 a year. You're feeding it rather than it feeding you. So I want you to underwrite where you live today. Underwrite where you rent today. And then I want you to compare it to other options. That's your homework. Underwrite where you live or where you rent and compare it to other options that your money could be taking advantage of in the marketplace. Each week I'm going to do this for you, okay? Each week we're going to talk about real estate, your real estate. Are you going to pay for it or is it going to pay you? I want to show you how to get real estate to pay you. You're probably not going to get in the food business and you're probably not going to get in the water business. But with real estate, you don't have a choice. In real estate, you're either going to own it and use it to make you money or you're going to live in it or work in it, and it's going to use you and make money on you. Thanks for joining today. I'll see you next week.